Thank you for joining us. I'm visiting with Wil VanLoh, founder and CEO of Quantum Energy Partners. We're discussing the investment prospects of oil and gas versus the gamut of potential energy investment opportunities, including alt energy and then in the decarbon space directly and specifically. Wil, thanks for joining us.
It's great to be here, Lisa.
So speaking of oil and gas, to begin with, what is your view in terms of the maturation of the oil and gas shale plays? We're just in the third inning. What do you think is the outlook?
Yeah. Well, you know, the shales have been underway now since kind of the mid-2000s. Obviously, the gas shales came first and then the oil shales after that. And so really in many of the shale plays in North America, with maybe the exception of the Permian for oil and the Marcellus for gas, I think most of the shale plays have kind of reached their apex in terms of productive capacity and are going to either have started to already have rolled over or will very soon in terms of output from those key basins. And it makes sense. I mean, we have, you know, you always drill your most economic stuff first, and that's what the industry's done, especially in light of the lower prices we've had over the last, 6, 7, 8 years. And so I think a lot of these, we've got to remember we've drilled several 100,000 wells in the shales already. And so, so I think we've drilled most of our best stuff. Again, Permian still has, I think, a lot of running room, as does the Marcellus for gas. But I do think that's something we're going to have to contend with. I think it's going to bring down, if you think about capital efficiency, when you drill really good wells, your capital efficiency is pretty high, and as you drill more mediocre wells, capital efficiency goes down. And I do think that, at some point we're going to have higher commodity prices, if for no other reason, to provide the economic stimulus to actually drill this next tiering of wells, because they won't be economic at $70 oil and $2.40, $2.30 gas.
What is the price then, at least for oil? Is it 100?
On
a sustained
basis?
There's
obviously service costs matter, right? Service costs, we've just had a lot of inflation. So, there's lots of variables that go into that. But I think, would it be foreseeable to say that we could see a steady rise of, 5-7% a year for a decade in commodity prices? Absolutely. And so, does that mean at some point oil will need to be over 100 to make things economic? I think so. And when you look at, in particular, like OPEC budgets and their break-evens, while their cost of actually drilling for and producing the oil or gas in OPEC countries is very low, remember they run their whole governments on that revenue. And so the true cost of break-even cost is really what's all the cost to run the government, the social cost. And so when you look at most OPEC countries, I think in today's dollars, that number is probably pushing up into the high 80s to mid 90s. And for some countries, it's well over 100 already today. And so I think as the U.S. shale patch, which became really the swing producer for roughly, 5, 6, 7 years there, as we lose our ability to meaningfully keep ramping production at 1.5 million, 2 million barrels a day, which we were doing there for a while, really that power goes back to OPEC. And I think OPEC clearly wants prices as high as they can be without causing, economic recession around the world.
And then in terms of investors, and whether they're putting their money in oil and gas and alt energy, you made the point that not all BTUs are created equally.
Right.
What do you tell investors in terms of should they be investing in North American oil and gas rather than divesting for their e-goals in ESG?
Right. No, it's a really good question. And, if you go back a couple of years ago, both in the U.S. and Europe, I think the vast majority of the people that controlled the large pools of capital in both continents were pretty much of having this mindset of probably we should be divesting, not investing in oil and gas. I think the war in Ukraine did a lot to kind of change certainly attitudes in the U.S. I think we've realized how dangerous that can be, when you don't, we have energy independence in the U.S. and our energy costs stayed very low relative, they were 5 to 10 times the cost in Europe. So I think that's caused people to kind of really refocus on energy security. And in doing so, I think now they're realizing people are like, okay, we're going to use a lot of oil and gas for many, many decades into the future. And so are all molecules, do they have the same economic footprint? Do they have the same social or governance footprint? And there's a lot of good data out there on this now. And if you look at molecules that are oil and gas produced in the U.S. and Canada, on average, are 25% more environmentally clean than molecules produced in the rest of the world. And in many countries like Russia, they're 200, 300% more clean. And same thing for on the S side of ESG. If you look at like the Freedom House global scores for social scores throughout the world, the U.S. and Canada are about 75% higher than molecules, meaning better than molecules produced in the rest of the world. And so, if you really care about the environment, therefore, I think the argument to investors is use your capital to already North American molecules are the cleanest and most socially responsible molecules produced in the world. So we should be increasing production from North America, not decreasing it. And so use your dollars to even cause those companies to get more efficient when it comes to environmental footprint. And so I think that's really starting to resonate, especially here in the U.S. We're seeing that with a lot of the big pools of capital that they're realizing that they can do a lot more good for the world by encouraging investment in North American oil and gas as opposed to discouraging it.
And then lastly, you described geothermal as being as kind of cousin to oil and gas in terms of, you need to understand geology and reservoirs and such to be successful at it. Carbon capture and disposal is akin to oil and gas too, because you need to bring the similar kind of knowledge. What do you think having a CO2 capture and disposal, a CCS component of an oil and gas company, are separate from it? What do you see as the future role of CCS?
Yeah. So as I talked about, I think there's two things that have to happen at scale if we have any hope of hitting net zero by 2050. One is we have to have large-scale adoption of nuclear energy. It's the cleanest, it's the most environmentally friendly energy in the world, and it's base load, unlike wind and solar, which are intermittent. And we have to have large-scale adoption of carbon capture and storage. You look at all the projections out there, even the most aggressive in terms of renewable penetration, we're still going to be using probably a majority of the energy the world's consuming in 2050 is going to be hydrocarbon-based energy. And so if we really care about ESG, we've got to figure out how to actually basically decarbonize hydrocarbons. And that's not that hard to do. It's expensive today for a lot of them, just like wind and solar were expensive a decade ago, right? And as you scale these things and new technologies come in, then you drive the cost down a lot. And we're very, very bullish on, in particular, pre-combustion carbon capture technology. And then, as you said, oil and gas companies are they're the best positioned companies in this country to make that industry a reality. Because you have to understand how to capture effectively a gas and then transport that gas. Well, that's what the midstream industry does. And then you have to inject that gas, that CO2 gas, down a well bore. You got to drill a well, and then you got to manage a reservoir. And it just happens to be, in a lot of cases, it's the same reservoir that we produced oil and natural gas out of. I think it's really kind of a cool story. We spent 100 and something years taking all this oil and gas out of the ground, and when we burned it, we created CO2. We're capturing that, and we're putting a byproduct of that back into that same reservoir, right? And we know that reservoir will hold, because the whole reason it was an oil and gas field is because it had a trap and a seal, and so it's a natural-based storage cavern. Otherwise, we would have never produced oil and gas from it. And so it's kind of a neat, bringing the oil and gas industry full cycle now, and using all that evacuated pore space to be the holding space for all this CO2 that we're producing. And in doing so, we turn a base load fuel that creates, greenhouse gas into a base load fuel that is basically CO2 free.
Again, hydrocarbons, one of the best fuel sources on Earth.
Absolutely. It's stored sunlight. That's all it is. It is. It was stored sunlight from millions of years ago.
I like that. Thank you. Thank you, Wil. And thank you for joining us. For more actionable business intelligence, stay tuned here at hartenergy.com.